Hello all, thank you so much for joining us for the GSVC webinar focused on social impact. We're really excited to have you here today. Please feel free to use the chat function for any questions or if there's any problem with the audio or anything else, and we'll address it as soon as we can. My name is Kelly Murphy. I'm a second-year MBA student here at Berkeley Haas, and I'm one of the fellows for the GSVC competition. I'm joined here by two experts in the social impact space who will be walking us through social impact measurement and sharing a little bit of their knowledge with us today. And I will turn it over to them to introduce themselves.
Thanks, Kelly. I'm Sara Olsen. I'm the founder of SVT Group, your outsourced Chief Impact Officer, as we call it. I'm an adjunct faculty member at the Middlebury Institute also, and I also am a founding board member of Social Value US, which is the United States chapter of Social Value International, which is the professional association for impact managers and analysts. And I would add that I was I am an alum of Haas, and I was a co-founder of the Global Social Venture Competition way back when. And this is my colleague, Eric Israel.
Thank you, Sarah. My name is Eric Israel. I am currently a corporate trainer in the area of integrated reporting, impact accounting, sustainability reporting, SDGs, and CDP. But before that, my background is I'm a chartered accountant. Started my career with Royal Dutch Shell. That's also where my accent is from the Netherlands. Learned that financial accounting did not include all the information that we needed in order to make decisions. So that's why this whole topic is very relevant. I'm also a partner. I was a partner at KPMG, the co-founder of the KPMG Sustainability Services network within that firm. I was a partner at PwC, and I was the director for GRI, the Global Reporting Initiative, which is an organization that provides reporting regulations for sustainability reporting. And I was the director for North America before I joined the training sessions that I do together with Sarah. Thank you.
Fantastic, thank you both. And we'll now turn to some slides on social impact assessment.
Wonderful. So our topic today is social impact assessment, and we will be going through a few tips that we hope will help you get started articulating the impact of your enterprise. I recognize that all of you are in a very early stage or within the first few years of running this enterprise. And so it can be a bit tricky if you are still determining what your business model is to pin down some of these issues. So you'll have to exercise your own judgment about whether you're quite there yet. But these are some good tips and rules of thumb that you can use once you've gotten your business model fairly well defined. And you can use these not just for the purposes of this competition, but of course for any enterprise and any kind of work you do going forward. This advice is informed by work I have done over the last 20 years on the impact management profession. So all of the advice that I'm going to share with you is drawn from thousands of practitioners, investors, standards bodies, and others who have worked on building the skill and the business discipline of understanding and managing both social impact and environmental impact. When you are working on an enterprise that has a particular mission, it's impossible to have a predefined list of indicators that could cover every possible scenario of what matters for your enterprise. The context is going to be different for each case. Your particular core competencies will be different. The world is changing all the time. So in order to understand the most important impacts of your enterprise and give you the tools you need to manage for impact, you really have to go with a set of principles rather than looking to some preset list of indicators. You need a set of principles that will guide the judgments you have to make about what you should measure and what you don't need to measure. These principles are best consolidated in what is called social value principles, which Social Value International has codified. They are these 7 principles that you see here. The first is to involve stakeholders in understanding what's changing, in measuring what is changing, in determining how important that change actually is to those stakeholders, and of course in telling the stakeholders about what is changing and what you're doing with that information. So involving stakeholders is the #1 principle. Understanding what changes for those stakeholders is next. Valuing the things that matter, meaning understanding how important the change is to those stakeholders and making a decision about whether it's important enough that you need to be tracking it on a continuous basis or not. The 4th principle is to include what is material, which is informed by your understanding of how important everything is. It's necessary that you include things that are important to your audience, to their decisions, and you shouldn't include things that don't matter. That's what is included in the materiality principle. Principle 5 is don't overclaim. And there's a lot of guidance about how you do this, but basically you should acknowledge who else is contributing to the change, acknowledge whether the change lasts or does it fall off over time, and acknowledge whether some of the change would have happened anyway, even without your enterprise's activities. Be transparent is sort of self-explanatory. Make sure that somebody can tell how you came up with your assessment. And then verify the result. In the ideal world, you would have a third party, such as Eric, perhaps, come and take a look at how you've built your analysis and testify to whether or not it is well constructed. That is a standard that many startups won't meet and don't need to meet. But as you become a more mature organization, you'll want to do that. These principles then are the ones that you'll need to refer to as you think through what is it that our enterprise needs to measure. When you've come up with the important aspects of your impact that you do want to measure, there are 5 dimensions of impact that it's important you account for when you are measuring and when you're communicating about your impact. The Impact Management Project over the last 2 years has been playing out, and it's a remarkable thing which I encourage you to go and look into at the Impact Management Project's website, which you can see here. This has been a facilitated process to bring thousands of practitioners and investors and professional associations together to come to a shared definition of what everyone means when they use this word impact. And the wonderful thing about this process is that there has been a consensus. The shared understanding of what the term impact means, whether you're an investor or an enterprise, is that there are 5 dimensions to this concept of impact. One is what is changing. Another is who is experiencing the change. The third is how much change are they experiencing. The 4th is what is the enterprise's contribution to that change? And the 5th is what is the risk that what we understand the impact to be is not actually what the impact really is. There's a whole lot of detailed guidance you can find at impactmanagementproject.com that helps you think through how to measure each of these considerations and what goes into them. But these are some key characteristics that once you have determined what you're going to measure, you should make sure you're taking into account. The other thing I would want to tell you is the Impact Management Project represents a bit of a milestone. For many years, decades even, a lot of players in the impact management space have been waiting until there was sufficient clarity about the right way to measure impact before they really committed to a practice of impact measurement. And in particular, I'm thinking of investment institutions. That consensus has now been arrived at with the Impact Management Project. So you will increasingly see investors asking for information relative to these 5 dimensions of impact. And it would be in your best interest to prepare to meet those questions by having information that speaks to these 5 dimensions. We'll get more into this later on as you proceed through the competition cycle. But for now, we're going to think about how do you get your head around this? This can be rather complicated and daunting to think about for your enterprise, what exactly is your impact and what should you measure? So let me break down how to think that through in order to set up your initial assessment of impact. There are 6 steps I recommend organizations go through. The first is to define your mission and vision. The next is to analyze your stakeholders, then articulate your theory of change and map your impact. Then you assess the importance of the different impacts you're having so that you can determine what's important enough that you should be measuring it. And then finally, you manage impact by doing a regular practice of collecting data, analyzing it, and using it to inform your decisions on an ongoing basis from now on. In this webinar, we're going to talk mostly about these 2 steps, analyzing stakeholders and articulating your theory of change. I'm assuming that you have resources you can look into to help you define your mission and vision. And there are plenty of good advice on GSVC's website, and also you can find it online quite easily. That's why we're focusing on these less well-known steps. Analyzing stakeholders asks you to consider both who and what is affected by your ventures activities or who affects your ventures activities. These effects might be positive or negative. They might be intentional on your part or unintentional. For example, if you are an ecotourism business, you may intend to help build connections across culture, and you may be very mindful of being cautious about affecting the local ecosystem and the economy, but you may not intend that the people using your service are creating a carbon footprint when they fly to the destination and back. So the unintended impact there would be the carbon footprint from your customers' travel. The other consideration about effects stakeholders are experiencing is whether those effects are material. Materiality means something that's important. And in this case, we would consider it to be material if your stakeholder feels that it's important to them. The reason we do a stakeholder analysis is that it fundamentally affects your ability to achieve your mission. If you understand who is affected by what you do, you can ensure that your effects are both either benign or positive. You can learn from your stakeholders also what they need. There is an enterprise I know of that is seen widely as a great example of a wonderful, successful social enterprise. They make solar-powered lanterns, and those lanterns have been used in India and elsewhere to replace kerosene lighting, which in homes creates a lot of pollution that's bad for people's health. Solar lanterns burn with no emissions. This business has had wonderful, highly rigorous impact assessments done, randomized controlled trial studies. So they know quite well what the relative impacts on their stakeholders are compared to those kerosene lanterns in terms both of health, educational attainment, economic impacts, environmental considerations. But the one thing they weren't doing is regularly talking with those stakeholders about what was going on for them with this product. What did they like about it? How important was that to them? Was there anything else they would like to see with that product? And because this business wasn't asking that question, it gave an opportunity to a competitor to come in who was listening to those customers and those stakeholders when they said, you know what, we really wish we could charge our cell phones off of our solar-powered lantern. So that competitor came into this enterprise's market area and started taking their customers away because their product was serving more of the needs the customer wanted. In theory, it would have been very easy for this solar-powered lantern company to have found that out if they had just been talking regularly with their stakeholders about what was changing for them, how important it was to them, and was there anything else they wanted. So I would absolutely recommend that as a fundamental practice of any business, you talk with your stakeholders about those kinds of questions. To get your head around your stakeholders, just do a brainstorming exercise. Who is affected by your enterprise's activities, and who affects your enterprise? You can see some of the common stakeholders listed here, which you could specify more for your particular context, and you may think of others. Eric, would you like to comment on the environment?
Sure. Let me read what's on the slide first. It says, some would debate whether the environment is a stakeholder, but it needs to be considered no matter what. So whether you call it a stakeholder or not, include it. And I think that's a very wise piece of advice, because there will be many stakeholders whose issues are primarily related to environmental issues. So you have to include those stakeholders at any cost. It's about environmental stewardship. And let me mention to you an example that I'm aware of. I mentioned in my introduction that I started my sustainability reporting career within Royal Dutch Shell. In the 1990s, that company was under a lot of pressure because they had an environmental disaster in their hands. They had to decommission an oil platform in the North Sea. And according to laws and regulations, the company was allowed just to sink it into the sea. And that was it. But there was a huge outcry from normal people, regular people, stakeholders in general, that basically said, well, Shell, that's something that you cannot do. Maybe you are acting within the law, but we don't allow you to do that because it's your responsibility to take care of the responsible decommission of that oil platform. And by the way, that's not the same as just let it sink within the sea. This is in the 1990s. In Europe, there was a huge boycott from consumers that didn't want to go to the gas stations of Shell anymore, which had an impact on their financial bottom line. And they realized that even though that they were behaving or acting within the law, it's really the so-called license to operate, which is really important. So if the stakeholders say, well, we don't give you that license anymore, you can be very successful, but if you can't sell your products, then you will not be successful anymore. So as a result, the company included that in its first sustainability report, which was verified, and I had an important role in that whole exercise. And they explained to the audience how important the environment was for Shell, for its so-called license to operate. They started in the 1990s, and it's an interesting company because it's really contributed to climate change. It's in the middle of that. And if you really want to understand what the company's position is with respect to the environment and climate change in particular, I advise you to look into the latest sustainability report issued by Shell, and you will see a very sophisticated and developed response how the company sees its responsibilities with respect to the environment. Is there a direct financial impact there? No. Is there an indirect financial impact there? Yes. And that's also the huge discrepancy between financial reporting and the market value of companies like Shell. Everything in between, which is not in the financial reporting, is something that's being assessed right now by investors based on information that's available. So the more information this company can give about the environment, the better investors and other stakeholders are in a position to understand what it means in terms of how to value this company. So going back to this slide, include the environment, absolutely. Include the environment because it's probably one of the, if you look at the natural disasters that we currently have, there's a direct impact there, there's a concern from society, and they want to know what companies do with respect to this. So also with startup organizations, start with the environment because that's probably one of the most issues that will drive financial success in the future.
Thanks, Eric. Even when you're small and even if it's not part of your express mission, you probably have environmental impacts. So be aware of what they are. You can consult resources that are free to you to use, such as B Corporation's B Impact Assessment online, to help you think through what some of those issues might be. Or indeed the GRI, which Eric is very familiar with. Now, when you are deciding whom you should include in your formal impact measurement, so who are you going to actually define indicators to assess change with respect to, and who are you going to include when you create a report, who are you going to show that report to, you'll want to prioritize those who are close to your operation or proximate, those who have the ability to control whether you can operate, those with power, those who can indirectly influence your success, who have influence, and those who are materially or affected in an important way, but who have low bargaining power, meaning they're vulnerable. They might tend to be people who are being affected in some big way, but you're not likely to hear about it unless you seek out that information. It's crucial that you include all of those considerations. We'll get back to that in a bit. Moving then to the next step in the process of setting up your impact measurement system, a wonderful tool is called a theory of change. A theory of change is an articulation of the main evidence-based strategies you will use to achieve your goals. A theory of change details the assumptions that connect the short-term, medium-term, and long-term outcomes that are the result of your business activities. A theory of change basically answers the question, specifically, how does your work drive the change you want to see happen? Most often we see a theory of change in the form of a diagram. The beauty of a diagram, instead of a written statement or a table that moves from left to right or right to left, is that you can show that change might happen in a non-linear way. And a lot of times in a theory of change diagram, there will be arrows, which might make it look a little bit messy, but they basically suggest how a change drives another thing to happen, and there may be many interrelationships. I would recommend that for your organization, you define a theory of change, and you can use this diagram template as a guide. An example that I think is fun to look at is that of the Santa Cruz Museum of Art and History. Their mission is to ignite shared experiences and unexpected connections. They say, we accomplish this mission when we bring people together around art and history through dynamic exhibitions, events, partnerships, and programs. If you imagine for a moment what you think their theory of change diagram might look like by thinking about this template, you can begin to get a picture of what that might be for them. And here is their theory of change diagram, which an artist has made very pretty. Feel free to pause and take a look at this in more detail. Once you've analyzed your stakeholders, articulated your mission, and defined your theory of change, which you may find you need to do in iterations. It's not necessarily that you do one thing first and then the next and then the next. You may go through some cycles of understanding stakeholders, articulating your theory of change, defining a theory of change informed by your conversations with stakeholders and the research you're doing into the evidence. And then you may need to refresh your mission statement because you've realized something about what you're doing. But once you've worked through those three fundamental steps, then you're ready to map your impact and define indicators. And that is something we will return to later on in the next couple of months, I believe. So we'll be providing you with a bit more guidance on how you work through those steps later on in the process of the competition. I want to point out that one of the most fundamental risks in the work of impact, whether you are an impact investor or an enterprise focused on impact, is the risk that you ignore those who are weak, but who are being affected in a major way by what you're doing. In this illustration, a lot of times people think if you are significantly affected, but you don't really have power over the enterprise, we should not include you in our impact measurement and reporting. This, quite frankly, is the way conventional business all too often operates. But you must not do that. Instead, if someone is significantly affected, even if they do not have a lot of power over your enterprise, you do need to pay attention to what your impact on them is and include that in your measurement system and in your reporting, including telling those people what has happened with the information you collected about their changes. So you need to communicate your report to those who are vulnerable so they know you are in a relationship with them and you're paying attention, and that will help them achieve the impact that matters for them that's being caused by your enterprise. Do you want to comment on this issue of stakeholders?
Sure. Let me read it first. It says, stakeholders are analyzed during initial setup, but they are also engaged on an ongoing basis in sound impact management. And I think that's very important. It's not something like you ask stakeholders only in the beginning. It's a continuous process. And with process, I really mean that companies are a little bit uneasy to reach out to stakeholders. And that also means that they need to have a process in place, how to engage with stakeholders, what questions to ask, how to formulate what the company's performance should be in those areas that are material enough, and also report back to those stakeholders as well, because you want to engage them in the following year and all the years that following after that. Let me, there are just two things that I want to highlight here. It's not so that every stakeholder with a demand that the company will need to include that in its strategy. It will need to have a process of what to include and what not. And that's what Sara mentioned in the beginning. What is material for the company and what is not material for the company. So in other words, if there is a stakeholder with a single issue that is very important for that stakeholder, but within the strategy and the mission and the vision of the company is not material enough, then the company will need to explain to that stakeholder why that topic was not included in their performance. And you can argue about that, but at least there is a process. But that communication is critical because you don't want the stakeholder to become disappointed. If there's a stakeholder whose objective is included in the company performance, then the company will also need to respond back to that stakeholder after the year and explain how its performance was. If the company underperformed, the company will need to explain to that particular stakeholder how it will mitigate that risk. So what is the company going to do in order to make sure that its performance for next year will be better, and communicate that with the stakeholder? Because only with stakeholders you can make that progress. As a company, you can't operate in a vacuum. You really need to have the input and help from stakeholders to progress further. And then going back to the Shell example, when that happened in the 1990s, Shell was really at the bottom in terms of reputation of companies with respect to reputation to the environment. But they really excelled in the process of engaging stakeholders and making clear that they were really concerned about those topics because they understood the concept of their license to operate. And they put a whole process in place, and within 5 years, that company was able to get from the bottom of that list to the top 5 of that list. So if you do this well, and if you build credibility with stakeholders, and you communicate with them on a regular basis, you can really make a lot of progress. And then in return, it's a lot of reputational capital that you get from that whole process.
Mm-hmm. And that grows in lots of different ways. It gives you better recruiting of the best people. It gives you PR and marketing opportunities. There are a lot of wonderful benefits from taking the act of being in a relationship with your stakeholders to be a strategic priority. It should not, if it feels like a chore, you're doing it wrong. You need to realize the opportunity and the value that is held in the minds and experiences of your stakeholders and treat it as a core part of your business. With that, then, I am pointing you here to a number of useful resources. There's a great, very short article about how to craft a compelling and concise mission statement. There's guidance about how to develop a theory of change. There is an interesting report that came out of the G8 in 2014 on how to map impact, and a number of other things describing what's going on in the world of impact measurement and management. And then if you want to drill even further, there are lots of great resources on the impactmanagementproject.com's website, fantastic resources from Social Value UK, which is the United Kingdom's chapter of Social Value International, on how to involve stakeholders, how to map impact, how to do a good job defining outcomes and indicators. And you can also plug into that network and be a part of the movement of really changing the way society accounts for value. And then you may have heard of IRIS, the Impact Reporting and Investment Standards. This is a taxonomy of coded indicators that's designed to assist with clarity in your impact reporting. I recommend that you go to IRIS to see whether they have indicators that are relevant to your enterprise after you have worked out what is important for your enterprise to measure. And with that, let's turn it back over to Kelly to give you some more guidance about how you can win this competition.
Great, thank you so much. Before we move on from the social impact measurement, we had one question. If we can actually go back a few slides to the 5 principles, or the 5 dimensions of impact. The question is around if you can share a little bit more about what that looks like. And I personally was especially curious about contribution. If you can talk a little bit more about how you measure that and what that looks like.
Absolutely. Well, one thing that you can find if you go to the Impact Management Project's website is links to additional resources that help you unpack what that means. The best resources that I know of are found in the Guide to Social Return on Investment, which is a publication you can download from Social Value UK's website, cited later on. But when they say do not overclaim, that's the same thing as contribution. And there's guidance about this principle of not overclaiming that's provided in the Guide to Social Return on Investment. The idea is you need to think about whether the change that's happening would have happened anyway, whether it drops off over time, whether there are other parties who are playing a role in causing that change, and not only the one entity that you're looking at, and also whether there's displacement. This means whether if you're causing a change, is what's happening that the problem or the issue you're trying to resolve is just moving somewhere else. That's displacement. Contribution is a key issue. It's the hardest part of measuring impact, and it's the costliest part. But that's where I would suggest you go for guidance, Social Value UK's website.
Thank you. Please feel free to send any other questions that you think of through the chat, and we'll make sure to get to them at the end. But now we will go through a little bit more about the logistics of the competition.
Great, thanks so much, Sarah and Eric. I'm Jill Erblin, and I'm the program director for the Global Social Venture Competition.
Jill, you're not. Oh yeah. Are you in there?
So right now we're going to move into just spend a little bit of time for those of you who maybe attended the last session. This is going to be a repeat of the info session we did last time, but we're just going to spend a little bit of time walking through a little bit of the nuts and bolts of the competition to help you understand what's going to be required and asked of you when you submit your first round application. So GSVC, as you know, it's a competition for early stage social entrepreneurs, and If you move on to the regional in the final round, you'll have opportunity to connect with mentors, have exposure to investors, and then at the final round be eligible to be qualified to win $80,000 up to $80,000 in prize money. So this year we're really excited to celebrate our 20th anniversary of having impact in the world. And this year our focus is also on technology for good. So what this means is that we're just asking that every team have some component of technology that you're utilizing within your idea. It could be that your entire project is a technology solution, or that you're utilizing technology in some way, shape, or form to solve your challenge. This is just a quick snapshot of who we are. We're really excited that we have 24 global partners this year, and we'll give you a sense of who those partners are in a bit. And again, this is just a quick overview of who we are, what we've accomplished. Again, just to remind you, all teams do require a current student, whether it's an undergraduate student, graduate student, PhD, or a recent alumni. And there are more detailed guidelines on the website if you need clarification. And again, we're really focused on that double or triple bottom line, as we talked about. So you really want to focus on your financial sustainability in addition to your social and/or your environmental impact. Here's a snapshot of our partner network. Those of you from around the world, the regional partners are in green, and most of those partners are the ones who'll be running the regional competitions. So if you have questions, you can always reach out directly to those regional partners, or you can obviously reach out to us as well. But that's just a snapshot of our breadth and coverage across the globe. So here we get into the nuts and bolts. So you want to apply to one regional competition. Most of you are going to apply through the UNoodle platform that we've set up, and it will directly take you to the platform here. And so if not, you want to go to gsvc.org/apply, review the map, the Google map we have there, and select your country, and it will also direct you to where to apply. If you have any questions about that, you can, of course, email us and we can help you confirm which region to apply to. But again, you want to apply based on where the majority of your team members are working and operating. So for example, if you're a student here at UC Berkeley, but maybe your project is focused on a solution in India, you may have one or two team members based in India, but you're the primary student, you're the primary founder, you're based here at UC Berkeley, you would want to apply through the US round. So here's the next steps in the timeline. So first deadline is December 3rd, and at that point, you'll want to have prepared your 3-page executive summary, your 10 stakeholder interviews, and your bios. And I just want to emphasize, it was great that Sarah and Eric spent some time talking about stakeholders, because it is a key component to thinking about how you structure your solution and your business. At that point, everyone will be evaluated, provided you meet the basic criteria and guidelines. Everyone will go through a first round of judging in their respective regions, and most semifinalists should be notified by early January. It could be dependent on your region, so if you have any questions about that, you'll just want to check in with your regional round. And then some teams will then be invited to move on to a regional finals event. It could be an event or a virtual competition. And those will take place in February and March. And at that stage will be a bit of a deeper dive into your executive summary. Similarly, a bit of a deeper dive into your social impact assessment. You'll want to put together a pitch deck. You'll need to do at least 20 additional stakeholder interviews. And then you'll also need to put together a short pitch video. And then at that stage, from each of our regional competitions, the top 2 teams are selected to move on to the finals event, which we host at Berkeley in April. And again, will just be a revision of the same set of deliverables, however, another 20 stakeholder interviews. So you can see we really emphasize talking to potential stakeholders, customers, whoever they may be. So this is just a brief overview of the judging criteria and what you will be evaluated on. There's more detail on our website with the link below, but we really want you to focus on three key areas. The first is your business potential. So what is your opportunity? What is the solution you're trying to solve? How is that different How are you differentiated in the market? And then what's your financial sustainability to move this idea forward? The second third is your social impact potential, so what we had just talked about in this session. And then the third is your likelihood of success. So what is your implementation or your execution plan? What is, do you have the right team in place to execute this idea? And if you don't quite have the right team members, how are you planning to build out that team so that you can implement and execute on your idea? So here are the three, again, looking at the judging criteria, here's how they're structured in the executive summary. You're gonna see, a lot of it is focused on that business potential piece. And we do have a template on our website that you can link back to that will guide you through some of these steps and sections. Again, focusing on your social impact, your social value proposition, and answering a series of questions we'll review in the next slide. And then again, letting us know who your team is, how their experience relates back to your idea, and what are each of those roles and skill sets. And so here are the four, in addition to describing your theory of change and impact value, we want you to also ask these 4 key questions in this first step. So what is the challenge you're trying to solve? Why is it important? How do you intend to solve the challenge? And what is your vision for the future beyond solving the immediate challenge? And in addition to the amazing resources and overview that Sara and Eric just provided, we also have additional guidelines on our website that focus specifically to the competition. And we'll also make sure to share the resources that Sara has provided as well. The next area is your stakeholder interviews. As we talked about, this is a key component of the competition and helping you understand how to put together your solution. We want you to interview at least 10 potential stakeholders. We have some resources on our website that talk about how to do this and why it's important. Steve Blank, who is one of the pioneers of the lean launch process, has a lot of open source videos, and some of those are available on our website. And we don't need a lot of detail in the stakeholder interviews. You really want to just focus on the highlights, what your insights were, and how they're going to sort of change, improve your business idea. And that's what the judges really want to see, is based on your conversations with stakeholders and customers, how is it helping you define your solution and pivot and move forward? And again, we want you to interview real customers. This isn't about interviewing your friends, your families, your neighbors, but looking at people who are really going to benefit from your solution. Whether it's industry folks, whether it's government, whether it's customers or potential partners. And then lastly, we just want a page highlighting your team structure. So really highlighting the experience of your team members, how it's relevant to your solution, what is the role of each of those team members. And we also really need to know, if you're not fully a student team, then we really also need to understand who are the students or recent alumni on your team. And similarly, we have a template on our website that you can utilize to do that overview. This is an overview of the prize money, the structure at the Global Finals event. Everyone will be eligible for prizes, and what's also great, if you do make it to the finals, everybody gets an opportunity to pitch in front of a live audience, whether you're doing your full pitch or a short pitch. And at that point, we will stop, and it looks like maybe we have some more questions, and we do still have Sara and Eric here in the room. So, Kelly, let us know what other questions we might have.
We do have a couple of great questions. So the first question is from a team that's looking to reduce emissions due to decomposition of food waste. And the question is, if the key beneficiary of my enterprise is the environment, how can you best present this? I found sometimes judges are more compelled by projects where the beneficiaries are people. So how to best communicate it when the beneficiary is actually the environment. You have thoughts, Eric?
Well, yeah, that's. I think it's the $1 million question, and it's also the question that most companies struggle with. I think it's really about impact, and I want to also refer to some of the resources that Sara provided. If you look at SROI, for example, is what kind of measurements do you have in place in order to calculate what the impact is of waste reductions in terms of emissions and climate change. And I think that's the key, and that really goes into the nitty-gritty. You really have to do a lot of research in order to come up to that number. I don't think it's a standard procedure, so you really have to develop this all by yourself. And you have to make reference to methodologies that are already in place in order to earn the credibility of the methodology that you develop. The more credible the methodology and the better you can explain that to potential investors, the more likely it is that they will give credits to that part of the impact. You know, how much that is. I mean, how much is that compared to the financial contribution of the company, for example? Mm-hmm. And if you add it all together, you know, I said in the beginning, integrated reporting, there are many capitals. Natural capital is one of them. You can see as an investor what the total value it is, what a company provides, not only financially, but also in the area of the environment. Mm-hmm. So I hope that's, you know, I know it's vague because it really goes into the details of how to calculate that. I don't know, Sarah, if there's something that you would like to add there.
What I would add to that is that I do agree with you that sometimes people are more compelled by a human pain point that's just easily describable in an anecdote than a more objective assessment of things that are changing. But I do think there are human stories, human interest stories that you might be able to bring into your explanation. I wouldn't overdo that because you don't have a lot of page space and eventually you won't have a lot of time with the judges. But if you can think of a very short anecdote about the nature of the problem of food waste and how you are reducing that and how that directly benefits people's well-being in some way, that could be compelling. Increasingly, people are sensitive to the problem of climate change, so to the extent that you are dealing with methane emissions and other kinds of emissions that contribute to climate change, making the case that climate change is one of the very most important issues facing the world now, I think would hit home more than it may have in the past. And then the last thing I would say is that it is an observation I've had that you may find judges at different rounds of the competition who have a high degree of familiarity with some issue areas that they are presented with. And what that does sometimes is it makes them stricter. They have a higher hurdle rate, if you will, a higher standard that the team has to pass by because the judge is so familiar with that issue. They know all the weaknesses of the plan. Whereas areas where they may be less familiar, they actually may have a lower bar. And if you're in food waste, that's actually an opportunity that's a real business category, and therefore there may be some judges who are a bit more sophisticated about that. So I wouldn't be shy about really doing your homework about what the problems and the opportunities are in that space and detailing out your reasoning and defending your assessment of impact and so on with credible standards. I hope that helps.
Thank you. We have a question about sending a video of my social enterprise showing the problem, solution, theory of change, implementation plan, instead of the written summary and proposal, and if that's allowed in the competition.
Unfortunately, we do need a written proposal from everybody. You're welcome to include a link to a video if you haven't. You know, there's no guarantee that the judges are going to review that, but in the second round of the competition, you will be asked to do a pitch video. And so you could include some of those materials. But we do need everything in written format to share with the judges in an executive summary. And again, there is a template on the website that you can utilize to start to build that out if you don't have something in place.
We have another question about the application, which is, does the solution have to exist, or will a prototype or model of the tech solution suffice?
Yeah, you don't have to have a prototype yet, or you can have a prototype. It still can be early idea stage. This is an early stage competition. So, you know, we do see a wide variety of, you know, in some cases the solutions are more developed. People already have customers, but we also see very early stage ideas as well. So it needs to be within 2 years. So if you're in the early stages of working on it, you are eligible. And you can also enter GSVC up to 2 years in a row, provided you're still eligible the second year if you haven't made it to the global finals. So For example, we had a team several years ago at UC Berkeley that applied the first year, was really early stage. I think they made it to the regional round their first year and then continued working on the idea, and the next year they made it to the finals and actually won the competition. So that's just one example of, taking advantage of something like the competition to work through your initial ideas.
Thank you. A couple more questions. Can you talk more about the lean methodology of launching a business? I've read a bit about it, seen some videos, but would like to hear what you have to say. We did have our last webinar, I think would be helpful, that is recorded, and that dealt a little bit more with that topic. But I will open it up if there's any comments that any of the three of you have, just briefly on that.
Well, the lean methodology is really how we teach entrepreneurs and entrepreneurship here at UC Berkeley. And it's really about, it's really deeply embedded with the customer or the stakeholder interviews, utilizing a business model canvas or the impact canvas to structure your idea and start to think about it, and using those tools to really iterate on your idea quickly. And this allows you to hopefully pivot and learn a lot in a very short period of time. And so that's why we call it that lean startup, lean launch. In the early days of GSVC, we asked teams to put together a 25-page business plan. In some cases, though, it continued to be an idea all throughout the competition, where going through the lean launch process really helps you try, fail quickly, or try and move quickly. And especially utilizing the stakeholder interviews as a way to get that immediate feedback on, is this the right solution? But again, and also to Kelly's point, I would encourage you to review the problem solution fit webinar. In addition, we have additional resources on our site that have links to the different canvases you can use to structure your idea, in addition to other videos that Steve Blank has shared in their open source. And again, Steve Blank is one of those pioneers in this space. Hope that helps answer.
Thank you. We have a question about potentially doing a webinar on the financial sustainability piece and revenue streams. I don't believe we have a plan to do something on that as of now, but thank you for that suggestion, and that's something that I think we as the team can discuss, and I believe we have some resources on the website around that as well.
We should, and if there's anything specific you're looking for, again, we have a whole resources section on the GSVC site, so I would recommend taking a look there to start. And if you have specific questions, let us know. We can try to connect you to other resources.
If I may, just to add to that, and I think there's already lots of resources available there, but I would also encourage people to look into the integrated reporting framework. That's really about financial sustainability. It really highlights the so-called 6 capitals. Financial capital is one of them, but that's also the intellectual capital, the human capital, the social relationship capital, the natural capital, and the manufactured capital. If you go to that framework, it provides a very good summary of what that is. And in my view, this financial sustainability is really a reflection of those 6 capitals. And I encourage participants in this contest to look into that and see how they can articulate the value that their solutions bring related to those 6 capitals. So.
Great, thank you so much. And then we have a question about reaching enough stakeholders. Our team's really at the development stage of our idea. We've begun experiments, but we don't have a huge number of potential customers or partners yet. Should we wait until next year?
I would say that, if you are in the initial stage and you've started having some experimentation, then you should have enough formulated ideas to start talking to potential or prospective customers. I mean, again, the first round, you only need 10 interviews. And I'll just give you an example. We have programs that we teach here at the business school where they're week-long programs, and the students in those programs have to do 50 customer interviews in 1 week. And so, I think 10 should be fairly reasonable in the next, 2 to 3 weeks or so. So it's really up to you.
I would add that even if you are still figuring out what your solution is and you don't have anything close to a business plan yet, what you should be doing is talking to potential stakeholders, because that's how you'll learn what hits their buttons, what speaks to them about what you're trying to do. I don't think there's any way of making the progress you need to make without talking with stakeholders.
Absolutely. And Eric, can you just repeat the name of the framework you mentioned?
Sure. The official name is the International Integrated Reporting Framework, and that's issued the IIRF, and that's issued by the International Integrated Reporting Committee, the IIRC. I'm not sure what their website is, but I believe it's integratedreporting.org. But if you Google International Integrated Reporting Framework, it should bring you directly to the PDF where you find the whole framework.
And we can add that link to the follow-up. So if you've RSVP'd, we will send a follow-up with the link to the video, and we can add those resources.
Well, thank you all so much for joining us and for the fantastic questions. We will have this as a recording, so if you wanted to go back, review any of the slides, or go through it more slowly, that'll be available. And we really look forward to seeing your application soon.
Yeah, and if you have additional questions, you can always email us at info@gsvc.org.
Thank you so much.
Thanks, everyone.
Thank you.